Hey everyone, hope you're doing good. This is going to be my weekly trading reflection, week 6, and I'm super happy to tell you because I am finally am able to pass phase 1 of a funded challenge account. And guys, you have to know this is after so many lost funded challenge accounts, so many breaches. So I should be proud of myself. I made about 8% only this week. So I passed phase 1 of the Bright funded challenge account. This is my 50k account. You see, I made 4k on it, so that's 8%. And before you guys say, you should be up on 55k, right? Because you made 2% on the account last week. Yeah, that's because I'm actually just counting my percentages based on the valid trades that are following my plan. So I took a lot of gambles in the beginning of the week that maybe lose some trades, and like it doesn't make sense. I'm not gonna count them in this journal. So in this video, I'll show you the trades I took that actually make sense and why they were losses and why they were wins. So yeah, I think it's very valuable. So let's just get right into it. So the first trade was on Euro USD. It was on Monday, New York session. The bias was bullish, daily and mid time frame was bullish. We had a minute 15 fair value gap inside the discount, and what basically happened is, you can see right here, this is the trade. So basically I had a bearish bias. Why? Because we had a double sweep right here inside some kind of liquidity pool, right? This line is where the liquidity pool starts. So we had a wick into it, nice displacement down again. I mean, this is just a retracement, but you see that we have another sweep of it. And then I was anticipating a potential market structure shift, but because we didn't have that and we failed to close below this low, and afterwards we formed a very nice minute 5 displacement candle. I just market entered right here because actually the mid time frame was bullish and I would just counter trading trend for no reason. So if I see disrespect of this fair value gap, and especially this displacement, it made me go long and targets like some next liquidity pool right here. Now this was actually a break even just because I didn't close right here. So the lesson for this trade is that I should have at least taken out 50% when taking out that new high. Guys, if you are taking profit, this is really what I found. Just take profit based on what the market is telling you and not based on I need to R, right? So if it took out this high, then you should close the position. I mean, at least 50%, right? Because that's your draw on liquidity target. And especially there was no real next draw on liquidity target. So then I should just close the trade, and I'm happy with actually 1.6 R, but I wasn't happy when I took the trade. I was just too greedy, and greediness destroys traders. So this is a big lesson. Just take profits, and yeah, it just stopped me at break even. I mean, good that I set my stop loss to break even because that's just nice risk management, but didn't take profits. So bad decision. The next trade was a 2.75 R win trade, and yeah, I mean, this is just very clean. We had a lot of buy side liquidity building up right here with these highs. We didn't get any sweep right here. We had some nice I think some minute 15 order block. Let's just look at what the confluences were. Yeah, just an R1 fair value gap and some buy side. So basically here was an R1 fair value gap somewhere, and we swept into it right here. Then we made a fake break of structure. Then this is basically what made me enter, because yeah, you can see this as one sweep and second sweep, and that's my entry right here. This could be my entry right here because, as you can see, we didn't break this high afterwards. So that means that we're just going for the lows if we fail to close above this high, or just even take out this high. We didn't even take out this high. So after I saw that and we had a displacement down like this candle, like this is just telling me so much. This is telling me smart money is gonna go down. We swept this liquidity, we're going for the lows, and that's exactly what happens. And that's why I'm not really following my trading plan to the T, but that's why intuition is actually also very important. Just being able to read price action and tell when price is ready to deliver to the downside, right? And that's what I saw right here. We took out the sell side. Doesn't really matter if you have 2 or 3 sweeps. We took out the sell side, then we failed to close above that high. This displacement is telling me that we are going lower, and then just I entered right here with the closer stop because I really don't want to see price going higher. And this was a beautiful trade. I don't know why it was only 2.75 R, because this looks like 5 R. Oh, and I think it's because I used 0.5% risk, so it's calculated like that. But very nice trade. On to the next one, what was the next one? Let's look at it. It was a loss on GBP USD New York session. The weekly was bearish, tapped into premium and had a bearish rejection. Let's see what we got right here. Oh yeah. Okay, so this is a bad analysis. I didn't read the bias right. So what did I say in my improvements? I wrote down that I can't disrespect the mid time frame trend and daily trend. This was not just a sweep inside the premium. There were strong candles close. Also way too late entry. Literally at the bottom of the retracement, too rushed and hungry for a new trade because I hit a nice trade the day before, right? So yeah, basically the daily was bullish. Actually, the mid time frame, so the hour 4, the hour 1 is also bullish. And actually, this could have been an entry because this is where we entered in the higher time frame premium. And yeah, I mean, this is just a super bad entry because looking at it, this is just in a fair value gap. And yeah, just a bad trade because I should follow the mid time frame trend. And especially, yes, maybe on the higher time frame, we are entering inside a premium point of interest right here, right? But if the hour 4, the hour 1 is very, very bullish, we had a nice candle close on those time frames, then like why should you try to predict the daily bias, right? Play the trend, follow the trend. The trend is bullish, so no need to take shorts and react on some higher time frame tap into the premium. So yeah, that's a very important lesson to keep in mind. Don't just focus on getting those crazy RRs by getting in short at the premium of the high time frame trend and then riding it all the way down to like 30 R. I mean, it's worth it, but it's very, very hard. So following the trend on the mid time frame is very, very much better, actually, in my opinion. So the next trade is a winner also. It was at 2.79 R. Let's look at this trade. Actually, this was the trade after I took the loss right here. So this is where I hit my stop loss, and then I just changed my mind because I just realized what I just told earlier, that we are bullish on the mid time frame. And basically, after seeing this order block getting formed, this big displacement, I market entry right here with this buy side liquidity, this fair value gap, this order block being the target. Quick 2.79 R, very nice trade actually, following the trend and just respecting the mistakes I took earlier. So then we are down to our last two trades. This trade is gonna be a loser. It was this one. I mean, looking at it, it was actually a winner, but I basically didn't take profits right here. This is the biggest lesson of this week, I think, is just to take profits at places where you should take profits and where the market is telling you to take profits, not based on your R, right? Because maybe this is going to be like 2.78 R and this is going to be 3. So you want to take a 3 R because that looks better in the stats and it looks better to show, right? But yeah, this is where we saw a bearish rejection. A rejection and a bullish impulse. Why should I close right here? Because first of all, we had a bullish sweep right here. So we sweep this low and we get a displacement up. So this should be my sign to just close the trade and accept that this is the bottom of the retracement. Also, I was just trying to catch the retracement of the bullish trend. So also not a good trade. These were all trades just taking after each other. So yeah, as you can see, I just lost trades because I were not following the mid time frame trend, and I won trades because I was following the mid time frame trend. So the next trade was actually following the mid time frame trend, and this was again a winner, right? So this should be really a good realization of why you should just follow the trend, follow the hourly trend, the hour 4 trend, because that's very, very strong. And if you lose because the trend is switching, right? So that should be a good loss. I can take that. But if you lose and because you didn't follow the bias and you just were focusing on your bias that's actually wrong, then that loss can hurt more, right? Because like you didn't read price action right. So this trade, I explained it on my Instagram also, but let's just go over it. We had a nice target right here being this wick. Wicks are really good to target. There are a lot of liquidity right here above it. So basically, like I said, we have a bullish sweep right here and then we have an order block being formed. This candle, this is like, I really like reading like displacement candles, because as you can see, look at this candle, it doesn't have a top wick, right? So that's telling me like, whoa, this is big volume coming in, right? And if we close actually on the minute 5, on the minute 15 above this high, then I just market enter, right? I really like market entries because I can just quickly go in and out and read price action based on volume. So yeah, following the trend, this was a target. Candle close above this high, we formed an order block, so I just ride it all the way following the bias. So yeah guys, that was basically it. The main things I actually realized this week is, first of all, just follow the trend, of course. Second of all, like you can have a trading plan, right? You can have every rule written out, but at the end it's just really your intuition and your experience in the markets, because maybe we didn't take out this high right here, and I actually should have waited for this break and then a retest. But just because my intuition was telling me like this couldn't go anywhere than just up, because we formed this nice order block, this nice displacement candle, then I can just market enter right here, because like it's the same thing as your trading plan. You're just like twisting it a bit, and I think that will make you profitable, because mechanic systems, I think they will never work. It's just you basing on your setup, or if you're gonna take it or not. So I don't know if it makes sense, but I think intuition and market experience and just being able to read price action really good without any emotions, and just watching the markets in like every perspective, in a buy perspective, in a long perspective, because that will make you a neutral observer of the market and not an emotional one. So that's very key. So yeah, I just realized that I just have a trading strategy, but I don't have to follow it to the T, because like if it just makes sense, take the trade. And if you're feeling like you're in a trade and you just want to hope that it's going to your take profit, but actually your head is telling you, actually I am looking at the chart and it doesn't look good, then you should close it at all costs, because that's why I lost a lot of money in the past, just by actually feeling like, this is not a good trade, but if it hits take profit, then it should be really good. So then you wait for it to take profit, but it actually goes to your stop loss, and it's because you didn't follow to your plan. So that's really a key thing I realized this week, is just like only enter a trade if you're really feeling like good about the trade. Like it doesn't have to be like everything needs to align. No, just like there's something inside that's gonna tell you like, wow, this is a good trade. And that was the feeling I had playing these trades. So I think that is key, and I think not a mechanical system will make me profitable. I think you will make yourself profitable by choosing what trades you take and what trades you don't take. So yeah, I hope you had any value of this video. I will be starting my phase 2 tomorrow with 0.5% risk per trade. This is a big milestone for me in my trading journey. So if I lose phase 2, that be it. I will learn a ton, but I'm hoping that I will pass phase 2. Only way I will lose it is because I am gonna gamble and not sticking to my risk management, not sticking to my trading plan, overtrade, revenge trade. These are the things I should avoid. So yeah, hope you had any value of this video. I would really appreciate if you guys give me a like and subscribe. It will help me out a lot, and I'll see you guys in the next one. Peace out.